right. All right. It's time for another one. TRP on the TSX. Secretwars in full effect. Like, hunting down those candidates, honestly. And when you have markets in stage 2 everywhere or approaching stage 3, it's hard to find those stage 2 stocks just exploding. That's what we're looking for, those A-plus stocks. Luckily, the TSX has seemed to be in the stage 3 already. Maybe stage 4 might be some precursor stocks starting to drive down that index. And we might have a chance of getting in at the start of a stage if we're looking for stage 4 on the TSX stock exchange. I wouldn't look for stage 4s in the NASDAQ or the New York Stock Exchange right now, as they're in stage 2. So if I want to be at the beginning of a stage where I could ride the breakdown or break out, I'm going to ride the breakdown on a TSX stock. That's what I'm looking for. So what do you have here for TRP? There's a couple of things right before I start. I started digging around the community, the stage analysis, Stan Weinstein community, and I found 2 sites, chartmill.com, to run some screeners on that would fit the Stan's framework. There's the Mansfield RSI screener, and you could build your own screeners. So if ever you guys want to get some candidates, you could probably build some screeners or use the ones that are pre-configured there. And there's another great site. It's called stageanalysis.net. It's a forum, old school style. I believe it's been up at least since 2011 and maybe before on another name. And honestly, a lot of the questions I had, I believe the answers are on that site for me. And it gives me a different view on how people read the book and on details that I might have missed reading through the book. So go take a look at it if ever you want to do some stage analysis. It's a great starting point. And even on the stop losses, I was asking myself some questions: how to move the stop loss. Is it under the V, but for the trader's way, but do you still put it under the correction and under round number? And it seems yes. So you would move it down. Let's say the sell stop would be here. Well, you'd move it down just to make sure you're under round number, according to Stan, right? Remember, round numbers under 20, they're half. So it'd be 19.5, 19, 18.50, 18, and above the round numbers, I think they're full dollar sign. So 47, 46, 45, etc. What else did I learn is that I was using had a little difficulty figuring out exactly how to identify my pullbacks and the corrections and then the move forward. At the beginning, I was looking at the RSI to help me really identify a correction bottom. When I have a V here on the RSI, that's telling me that the price action has went down and went back up. And after that, you just have to wait till the price action goes up to maybe 3/4 of the way up towards that previous high, and then you move the sell stop. Stan, after that, I read that Stan says 7% 7% corrections are needed at least to be able to move the sell stop, and then maybe 8 to 10% correction on the initial pullback. But like I pointed out, what about Forex? Stan doesn't talk much about Forex, but a 7% correction on Forex is like just crazy, right? It's not the usual range of motion for a Forex pair. USD CAD is $1.50. 7% is huge. It just doesn't happen that way. And on the index, let's say TSX has 15,000 points, or 7% is huge. So it might not correct that much for you to be able to move your sell stop. And then I was in a situation where I had no corrections on the way up. So that just didn't make sense, right? Could there be stage 2 with no corrections? Well, maybe. But Hard to tell. Like this one, the stage 2 right here. Look at this nice breakout here for TRP back in April. I believe it might be. Let's go back. Let's just do another more practice. The last podcast I didn't do practice. And here we go. So what is, it's twice the average volume previous, I forget, but on stageanalysis.net they confirm what Stan wrote in his book. So here I would identify it doing classical chart patterns. I seem to have a bottom. Oh, volume picking up, but there's no breakout. Unless you could have said this was the breakout candle, but it's not A plus because you have some close nearby resistance right there. So the real move would be a breakout above the 45, nice round number. And also remember the moving average, the 30-week moving average is still going downwards. So it's a little premature right now to enter, even if the volume's up. Oh, all right. So, but we're still never buy a stock until the price action has been above the moving average. High volume, but we still haven't closed above that moving average. So we don't want to be in. And yeah, okay, maybe this one here. Or not yet. We still have to wait. Oh, okay, here we go. Maybe here. So now, you see that triple confirmation, how it helped us? Here we had the volume, but we didn't have the close above the 30-week moving average. So no go, even if the RSI was still going up. And look, it just bounced down. Didn't make it. Chart morphs, more candles are added. Now we have a better resistance line here being proven at the 46 about level, 40, almost 47. And this is giving time for the moving average to flatten out even more. And now we have action above. So when we have the breakout, we'll be above the 30-week moving average. It'll be flattening out or going up. And that's what we're looking for. So, and the RSI. I just want the volume. Let's see. Let's hope there's volume. Oh, no volume. No volume yet. And there's just no breakout volume. So what does this mean? We would have not entered the trade, even if it's in the stage 2. We're definitely in the stage 2 right now. We're above the, but we don't have the, we just don't have the volume correctly, right? There's a lot of volume here, but it's not on a breakout candle. So I guess this one did not fit all the criteria. We would have not been in the stage 2. Am I misreading the importance of volume? It's kind of unfortunate, unless I'm misreading about the volume here for my breakout candles. This one would have been the way I do it, classical charting, my simple way, before I started doing the Secretwars. I didn't even look at the moving. I had a moving average, but it could have not been there. I would have had just my bottom formation here, and I didn't even look at the volume. I was like that, and I just had RSI for just for divergence. I look at divergence just to make sure, and I would have waited for the close. I do monthly candles. This is weekly, but just for a given example, this would have been my target. And is there divergence? Not with the close peak, higher highs, and I would have entered here at the end of the week. I would have put my sell stop at the bottom of the wick. And here's my measure move, and that's it. That's all she wrote. I keep it simple like that. And when I target attain. Don't look at the chart anymore. I did some price considerations, which I call, is there a wall? A wall is what I call resistance turn support or support turn resistance. In this case, see this breakdown here, previous breakdown for this top formation. So that support now is resistance. And you see my target? It's right there. So I could have adapted that classical chart implied measure move, which is like the swing rule for Stan, just to be under, just to make sure I get my profit limit gets hit right before. And if I had to have smaller patterns, I would probably take the closest pattern, closest target. And my reasoning was the closer to the target, the higher the probabilities of me reaching my target. So that framework I had previously, it was based to be able to sleep at night. It has zero maintenance once you're in the stock. The risk to reward, I sacrificed a lot on my risk to reward, but to have an increased probability of reaching my target. And that's all fine, but Stan, why I want to come back is that I want to ride those stage twos. So if I had a stage two situation, then with the Stan triple confirmation, I would ride it a lot longer than just the base formation of a classical chart pattern giving me an implied measure move, right? Sometimes it coincides. It's so funny. It Stan's by implied measure move. Even Stan talks about the swing rule. You reach it, you take half your position, and then you ride out with the other sell stop rules he has in place. And I've noticed some of these base formations, I'm going to reach a target, and the target's at congestion, and we might have a sideways patterns on the stage two later on. And then the trader's way, we could have added on based on that. So that's why I always say there's no wrong system. If you're really objective, there's a lot of overlap, because the system's based on, it's based on price action, and price action with support and resistance. It all comes back together. Fibonacci, extensions, targets, trace pullbacks. It's all the same. I've noticed that I've played with all indicators, and they all come back to the same. So I said, might as well keep it simple, right? If all the rest is just noise or stuff to reconfirm me that I'm doing the good decision, then they actually might confuse me, and I didn't need them. And even the RSI, eventually I could not use it. Simply price action. All that to say that I'm just going to reload the Stan profile, because I wiped out and I don't know why I have to remove the zigzag. My chart's deformed. So now my target would have been reached. So even this stock right now, what I could do is for stocks that don't have the triple confirmation of because there's missing volume of Stan, you could still play it the classical charting way, the simple way, and just play that, and you get again the action. If ever there's another signal for you to enter Stan's way, then you could continue off that, so you don't miss all of the move. And that might be an approach I take in the future. If Stan, I decide to keep that framework in my arsenal, and I master it, and I apply it the correct way, I could still rely on my classical charting framework on monthly candles, keep it simple. And on the weekly candles, use Stan when I get the triple confirmation to get in. And right now, there is none. Okay, so see it's going up, no pullbacks, no sideways formation. Maybe here, you see there's a sideways pattern, and that lateral move is making the moving average flattening out, right? Since it's not pulling it up, and the moving average is starting to flatten out. So if you have a little bit of imagination, you could easily imagine the moving average coinciding with the price action around here, maybe. And maybe it's a stage of stage 3, or maybe just a bounce off the moving average and then continuation of stage 2. Who knows yet? Oh. All right, let's see what keeps happening. So we would have played here. There's no volume. So on continuation moves, another question. Do I need volume on the breakout of a continuation pattern on the stage 2, the Stan way? All right, another question for the community. I'm probably going to post on stageanalysis.net tonight or tomorrow. And do I need volume on continuation patterns? So that's going to be very interesting to to find out. Because right now, if I don't need volume, then I could have entered here. Is the RSI going up? Not super duper. All right. So do I need a triple confirmation on continuation patterns? That's my question. And I'll get an answer. And no. Okay. And maybe that's why, right? We didn't have the volume. We didn't have the RSI. Couldn't trust that breakout. And look, I'll dig even deeper. I'm going to go on my 10-year monthly chart. And I just want to see if the higher time frame, previous, if we had run into a wall, previous support or previous resistance, support and resistance, or just resistance here. And that's why we slowed down. And no, it's just maybe this candle, that could have gave us an idea that this was about that resistance that we could have ran into. All right, back to Stan. It's good sometimes to bring the frameworks together. You get to see what overlaps, the strength, the weaknesses, and you keep learning, keep asking questions, and trying to figure out what are the links between things. And just don't take anything for what it is. Experiment, and in light of new evidence, then you have to adapt your point of view. That's why I always look for now, and I'm on StockTwits Twitter. I really appreciate people who change their minds. So somebody could be really like an opinion one direction, and then they change their minds, and that is a good characteristic of a good trader, to be able to change their minds. Hey, I'm seeing the future here. I didn't want to do that. Okay, so now stage 3, traders are out. I always forget to practice. Here's my trend line, and I draw my trend lines. I looked up on stockcharts.com. They have a great encyclopedia of examples of how to draw trend lines or whatever you're trying to do technical analysis wise. And trend lines, you could either do them using the highs and lows, so the wicks. But you could also, because usually sometimes the wicks, the market over-exaggerates a move, etc. So you could rely on the open and closes of candles to draw your trend line. So they say it's 2 points, stance is 3. And then they say you start 2 points, not too close together, because if they're too close, it's a less good trend line. So I could say this is 0.1, this is 0.2. And then we just kept writing on it. And this is 0.3. But Stan says at the break of the 4th hit, not a break of the, unless maybe this one here. 1 point, 2 points, maybe 3 here, maybe 4 here. I don't know how much of a U do we need for the trend line to be valid. In either case, this could have been, if I would have drawn it this way, traders, investors would have taken half a position right here, like almost close to the top. And then you see the price action moving all the way here. And if you would have been in this trade, traders would have exited here, the remaining half of the position, once they violate the moving average. And investors, wherever their sell stop might have been. But after that, that's another of the questions I have validate. I know Stan says that the investors towards the end of stage 2, they start moving their sell stops like a trader. And I'm just wondering if there's a violation. Let's say the sell stop of an investor was just here and there was no pullback and the price went up. At this violation, the investors get rid of their remaining half position. That's I would do it that way. Why? You're violating the 30-week moving average. You know the momentum is dead of stage 2. You might be entering a stage 3. Why wait and let it fall back here and waste all that nice ride? Might as well just exit. So that's my premise right now. But look, we didn't have the triple confirmation. Unless it was this candle here. Maybe it was... Maybe it really was this candle. Maybe there was, and I just misread it. And hindsight's 2020, right? But that's how you have to practice. So when you get to the real one, I know it's not going to be the same, but you'll have the theory out first. So if you don't take care of the theory, the practice, you're clueless. It's just bingo. But if you have the theory and you get time to D-Day, then at least you have something to back yourself up. And then, of course, practice, you might make emotional errors. But so right here, this could have been the breakout. And investors would have put their sell stop below the move, below the support, probably below the lowest candle here, in case there's and investors would have, traders would have put it 4 to 6% below the breakout line. And again, 4 to 6%, but that might change, right? I think on the stageanalysis.net, they use ATR, average true range. So depending the volatility of a specific instrument, then you would adapt your sell stop to that. That would make sense. If 4 to 6%, but if the stock's not it's a big jumper, then that might be too much or not enough. Got to think about those things. And check that out. Well, if you would have been in, though, you would have a nice stage 2. You would have rode it, would have entered in this candle, and you would have exited right here for half of your position, and the remainder half violation of the 30-week moving average. All right, but where were we here today? Okay, so what's happening? I'm going to fast forward this. Stage 3. Yeah. Okay. Then it's deep in stage 3. It's really flying out. That's a nice long top formation. And it could have continued to stage 2, but no. We have definitely a stage 4 in progress. Alert. Stage 4. So let's just imagine that this is how I would have drawn my support line. My breakdown's this candle right here. Volume, it's called fear. Where's my arrow? Here's my arrow. It's awesome. RSI going from above the midway point, going negative territory. Sell stop here. And buy stop for could put it here. Buy stop for investors right on top here. And for traders, 46% or above a round number. Maybe here, 260, 251. And just for a note, you see, that's the thing. Classical charting, top to bottom. If it's a tight formation in classical charting, maybe 10%, 15% move range. So I think this would be the case, 61 to 65. You could triple the target. So right now in this case, the target for classical charting would have been these 3 here, all the way down to 50. This is probably the resistance here. We might get some support here, and after that, it's clear ahead all the way back here. And for this, there's resistance turns support. So right near 50, 54 level is probably going to be congestion, and the move probably going to slow down there. All right, so we have the classical charting move, the triple, because of tight range, that triple target, and we have Stan. Let's see who wins. And oh man, look at the price action. Drop. Mega pullback. And all right, it's going back down. So let's say it would have been in. Price action goes here. And price action is starting to go back towards the target. Not quite there yet. Maybe halfway through. So again, maybe that's another question I have. How much closer to the previous low do you have to get before you move your sell stop? here for the traders and here for the investors. Halfway, 3/4. I thought I was going 3/4, but that might get greedy. Sometimes you want to protect yourself, or maybe it's because I'm not patient enough. So let's say you move it here. And now I wonder, how do we add? Let's say I want to enter here. Is it a good time to enter here since I moved my sell stop there? I do what? I start entering at the price. I'd enter here. And then if I'm the trader, my sell stop here. And if I'm an investor, my risk would be, this would be my risk as for my investor. So for my sizing, 1% of my NAV, according to that risk. And for the trader's way, 1% of my NAV to size here for the short, and then we continue from here. You have a trend line. Okay, 1, 1, 2, 3. So we have a trend line also here. So look, this is a stage. He's already in stage 4. So if you want to get in as an investor, you would probably short here, put your sell stop right there. If you want to short sell as a trader, short sell here, put your sell stop here. And then week after week, you'd have to move your sell stop according to this trend line. I think that is valid. 1, 2, 3 hits. Let's hope. Let's see how fear picks up on this one. This could be very. I'd have to decide rapidly, I think, if I get in. So this weekend, I'm just going to try to get answers on continuation moves for traders. How do you get in once you've missed your initial move, but there was a pullback? Do I have to wait till I get to here before starting to short again to have better chances on my side, or is this? Has this moved back enough towards that previous low for me to get in? Because timber, that looks pretty damn sweet. All right, TRP. I spoke my questions out loud, and hope to get some answers and share that with you guys next time. All right, see ya.